Magnificent 7 stocks crashed 50%. Buy now or wait.
Another volatile day on Wall Street as each of the three major stock indexes fell by more than 1.5%.
Hey, wealth builders, welcome back to Be Rich Formulas, your go-to channel for cracking the code to financial freedom. Today, we're diving into a massive opportunity or a potential trap in the stock market. The Magnificent 7, Tesla, Apple, Amazon, Nvidia, and the gang have tanked, some by as much as 50%. Is this the dip we've been waiting to buy? Or could these stocks crash even harder with tariffs, Trump's Fed drama, and economic chaos looming?
This has been announced. It might be that we do not get a straight answer.
Because I'm breaking it all down with a deep dive analysis, stock by stock, to help you make smart moves and build your wealth. Let's get rich with formulas. Hit that subscribe button, grab a notebook, and let's roll. All right, let's set the stage. The Magnificent 7, Apple, Amazon, Alphabet, Meta, Microsoft, Nvidia, and Tesla have been the kings of the stock market, driving insane gains over the past decade. These are the companies powering AI, electric cars, cloud computing, and your iPhone addiction. But as of April 20th, 2025, they're in a bloodbath. The Nasdaq's down over 20%, and these 7 giants have lost a jaw-dropping $1.8 trillion in market value. Tesla's down 54%, Apple's off 33%, and even mighty Microsoft's taken a 22% hit. Why? It's a perfect storm. President Trump's pushing massive tariffs, 10% on all imports, 34% on China, sparking fears of a global trade war. He's also talking about firing Federal Reserve Chair Jerome Powell, which is freaking out investors. Add in inflation worries, a possible recession, and markets are in panic mode.
Joining me now is Gordon Chang, China expert, Gatestone Institute senior fellow, and author of...
But here's the million-dollar question. Is this a golden opportunity to buy these world-class companies at a discount, or are we staring at more pain ahead? At Be Rich Formulas, we don't guess, we analyze. So let's break down the risks, the opportunities, and what each stock's future looks like. By the end, you'll know whether to jump in now, wait for a better deal, or steer clear. Ready? Let's dive into the chaos. Before we get to the stocks, let's talk about the big picture risks shaking up the market. These are the storm clouds hanging over every investor right now. First, tariffs. Trump's slapped a 10% tax on all imports with 34% on goods from China, and countries are hitting back. China's got 34% tariffs on US products. This means higher costs for companies like Apple and Tesla, who rely on global supply chains. JP Morgan says there's a 60% chance of a US recession in 2025 because of this trade war. Ouch. Second, the Federal Reserve drama.
Do you imagine that the president could fire this head of the Fed? Is that even conceivable to you?
Trump's been vocal about wanting control over the Fed, even threatening to fire Chair Jerome Powell. Powell's warning that tariffs could spike inflation to 5%, which means no big rate cuts anytime soon. Higher interest rates hurt growth stocks like the Magnificent 7 because borrowing gets pricier and investors get pickier. Third, market panic. The S&P 500 and Nasdaq are in correction territory, and sentiment on platforms like X is bearish. Investors are dumping tech stocks, fearing more pain. Gold surging, oil's dropping to $62 a barrel, and Treasury yields are signaling recession worries.
We've had this sort of back and forth price movement there. So where are those funds going? Are they going into cash? What are you seeing?
But here's the flip side. When markets crash, legends are made. At Be Rich Formulas, we know that buying quality stocks during big dips, like 30% or more, has historically been a winning strategy. The question is, are we at the bottom, Or is there more pain coming? Let's find out by looking at each stock. Transition, animated title card, Magnificent 7, stock by stock breakdown. Let's go through each of the Magnificent 7 one by one. I'll cover where they stand, how tariffs and Fed drama hit them, whether it's time to buy, and how long it might take to recover. Grab your coffee. This is where the Be Rich formula's magic happens. Tesla TSLA. Tesla's been the wild child of the group, but it's down a brutal 54% from its peak. It dropped 15% in one day last month and another 10% on April 4th. Why? Tariffs are a big problem. Tesla builds cars in China and sells a ton there, so a 34% import tax and China's retaliation could crush margins, plus auto tariffs of 25% on parts don't help. On top of that, Tesla's forward PE is still sky high at 86x, meaning it's pricey even after the crash. Ex-posts are calling Tesla a hated brand, and analysts at Wells Fargo say growth is slowing. Higher interest rates also make Tesla's cars less affordable for buyers. Buy now? I'd hold off. Tesla's too risky with its valuation and tariff exposure. Wait for a deeper dip, maybe 60% down, or clearer delivery numbers in Q3. Recovery could take 2 to 3 years if tariffs ease and EV demand holds, but a recession might push it to 4+ years. Tesla's a gamble right now. Apple IPO. Apple's down 33%, with a nasty 9% drop on April 3rd. Its worst day in 5 years. Here's the deal. 90% of iPhones are made in China, so that 34% tariff is a gut punch. China's also a huge market for Apple, and retaliatory tariffs could tank sales there. Suppliers like Qorvo are down 16%, signaling supply chain pain. But Apple's got a fortress of a brand and a forward PE of 23x, which is decent for a tech giant. It's got cash flow and loyal customers. Buy now? It's a moderate buy for long-term investors, but tariffs make me nervous. Try dollar cost averaging to spread the risk. Recovery? 1.52 years if trade tensions cool, but 3+ years if China's market takes a hit. Amazon. Amazon's down 29%, with a 9% plunge on April 3rd. Its retail business is getting hit hard by tariffs, since it sources tons of goods from Asia. CEO Andy Jassy says sellers will pass those costs to consumers, which could hurt sales. But here's the bright spot. AWS, Amazon's cloud business, is a cash machine and less exposed to tariffs. With a forward PE of 27x, Amazon looks like a deal for a company this diversified. Buy now? I like it for long-term investors, especially for AWS growth. Keep an eye on retail margins in next earnings. Recovery? 1 to 2 years if consumer spending holds, but 2.5 to 3 years if a recession hits hard. Nvidia, the AI king, is down 36% after a $5.5 billion hit from US chip export bans to China. It's also facing 10% tariffs on its Taiwan-made chips. But let's be real, Nvidia is still the leader in AI, and its forward PE of 21x is a steal for its growth. Trump's push for $500 billion in US AI infrastructure is a tailwind, and ex-posts say Nvidia's oversold. Buy now. This is a strong buy for long-term investors. AI is not slowing down, and Nvidia's the backbone. Expect short-term bumps, so maybe stagger your buys. Recovery? 1 to 1.5 years if AI demand stays hot, 2-3 years if trade wars drag on. Alphabet, Google. Alphabet's down 30%, but it's holding up better than most. Why? It's got minimal tariff exposure. Ads and cloud don't rely on physical goods. Its forward PE of 16x is the cheapest of the bunch, making it a bargain. But there's a catch. The DOJ's antitrust scrutiny could cause headaches. Still, Alphabet's AI and cloud businesses are killers, and Waymo's self-driving tech is a wild card. Buy now, this is a strong buy, low valuation, low risk. Just watch the regulatory noise. Recovery, 1 to 1.5 years as ads and cloud rebound. Meta Platforms. Meta's down 31%, with a rough 9% drop on April 3rd. Like Alphabet, it's mostly safe from tariffs since it's all about ads. Its forward PE of 20x is solid, and Meta's betting big on AI and the metaverse. But regulators are circling, and that's a risk. Buy now, goodbye for long-term believers in Meta's vision. Keep an eye on antitrust news.
The court ruled that Google has an illegal monopoly in the advertising industry. Meantime, Meta is still in the midst of its own antitrust case.
Recovery, 1-2 years if ad spending stays strong, 2.53 years in a recession. Microsoft MSFT. Microsoft's the rock of this group, down just 22%. Its cloud business, Azure, and AI bets like OpenAI are firing on all cylinders. Tariffs barely touch it, and its forward PE of 26 is fair for a company this steady. Trump's AI push is a bonus for Microsoft. Buy now? This is the safest bet of the Magnificent Seven. Jump in for long-term growth. Recovery, 1.5 years, maybe faster thanks to cloud and AI. Strategy and action plan. So, what's the Be Rich Formula's game plan? Here's how to play this crash like a pro. Best buys. Microsoft, Alphabet, and Nvidia are my top picks. Microsoft's rock solid, Alphabet's dirt cheap, and Nvidia's the AI king. Moderate plays, Amazon, Meta, and Apple are solid but riskier. Amazon's got AWS, Meta's got ads, and Apple's got brand power. Just watch those tariffs. Hold off on Tesla. It's too pricey and exposed. Wait for a better entry. Smart moves. Use dollar cost averaging. Spread your buys over 6 to 12 months to dodge volatility. Set stop losses at 10 to 15% below your entry to protect your capital. And diversify. Mix in sectors like utilities or healthcare to hedge risks. Watch these catalysts. Tariff news, Fed rate cuts, and Q1 2025 earnings will move these stocks. Stay sharp. Think long term. History shows that buying quality tech at 30% plus dips pays off. Recovery could take 1-2 years if trade wars cool, or 3-4 years in a recession. Patience is your superpower. At Be Rich Formulas, we build wealth with strategy, not panic. This crash is your chance to own the future, if you play it smart. Remember, we do not predict the future, and trading stock is a speculative investment. Check our full disclaimer. That's it, wealth builders. The Magnificent Seven are on sale, but it's not a fire sale yet. Microsoft, Alphabet, and Nvidia are screaming buys, but tread carefully with Tesla and Apple. Use our Be Rich Formula's strategy to stack the odds in your favor. What do you think? Ready to buy the dip or waiting it out? Drop your thoughts in the comments and let's talk wealth. If you love this deep dive, smash that like button, hit subscribe, and ring the bell for more Be Rich Formulas every week. Want more stock picks and wealth hacks? Check out our playlist right here. And always talk to a financial advisor before investing. Protect your money. Thanks for watching, and let's keep building that wealth together. See you next time.